Broadcasting live from the Business RadioX studio in Atlanta, Georgia. It's time for Atlanta Business Radio. Brought to you by Kennesaw State University's Executive MBA program, the accelerated degree program for working professionals looking to advance their career and enhance their leadership skills. And now, here's your host.
Lee Cantor here, broadcasting live from Fintech South 2024 at the Woodruff Art Center. So excited to be talking to my next guest, Luis Andino with Ditch. Welcome.
Thank you so much for having me.
So before we get too far into things, tell us about Ditch.
Of course. Well, Ditch is a personal finance app that uses AI to help people manage and repay their debt in a more efficient way.
So how does it work?
It's simple. So we take roundups of your purchases and then we send those automatically towards your debt. So think of walking into a coffee shop and buying a coffee for $3.40. We take that 60-cent roundup and then send it automatically towards your student loans, mortgages, credit cards, which means that you'll get to pay off your debt faster. And the faster you pay off your debt, the less you'll spend on interest. And that's how we help our users save money. So
how much does that, for an average person, come up to every month? Because 60 cents at a time, it seems like, my mortgage, it's going to take a minute to get there.
Of course. Well, we've gotten clever about how we go about it. And one of the things that we do is that we allow users to add multipliers to their roundups. So we have the average multiplier on the platform is 2.7, which means that 50-cent roundup is going to end up being over $1. And those add up to be about $150 on average for our existing users. But you could also take, instead of just a roundup, you could also decide to use a percentage of that transaction and then limit the transaction range. So if I go and, spend $150 and I'm allocating 10% of all my transaction spend towards my mortgage or my debt, then that $150 transaction would end up resulting in a $15 payoff. And those rack up much, much, much faster. But our average user today is able to send about $150 towards their debt every single month.
And then how much time does that save them in? And how quickly they can pay off their debt?
It depends on the type of loan. So mortgages, it's going to be much more time. For credit cards, it's going to be a little less time. It depends on the balance of the credit card, but generally users expect to save around 30 or 40% of the total time it takes them to pay off their debt with these payoffs.
Now, so how does the app work for me as an individual? Do I pay for the app and then you're doing this, or I'm paying a transaction fee every time we do this do-si-do with the roundup?
That's exactly it. So we take up a small percentage of every time that we make a payment towards your debt. And the reason that it's still very profitable for you as a consumer is because you're saving much more on interest. In fact, you're saving 5 times more on interest than what we're charging you to make that transaction. So the product is free to use. There are some premium features, but the product in itself and what I've described is free to use. And then we take a small percentage of those transactions, and that's how we make money.
Now, how cumbersome is it to make the connection between the app and all of the things that debt, like to get to permission them in? Because this sounds like a fintech challenge.
It is, and that's one of the things that we have solved. And our average user, it takes our average user about 4 minutes to link all their accounts and set everything up from the moment that they open the app for the first time to the moment that the payoffs start accruing. It takes on average about 4 minutes.
So it's a matter of the permissioning the place I owe the money to say, hey, I'm going to make extra payments at random times, or do you do it all at one time once a month? Like, is it happening in real time as I'm making the payment? It's going and sending $1 to my credit card?
It's not, because of course transaction fees would make that impossible. If I'm sending 30 cents at a time and I'm paying a couple cents per transaction. So what we do is we aggregate and we allow the user to choose the pace, but it defaults to $25 right now. So every $25, we're going to be making a payment from your checking account directly to your debt, be that a student loan, your credit card, your mortgage, etc.
So you're putting it in an envelope.
Effectively, you can think about it that way, yes.
So what was the genesis of the idea? How did the concept come about?
Well, first of all, I have a background in consumer lending, so I worked in consumer lending, and I just worked with enough people that were managing debt to realize that, frankly, debt kind of sucks, and most people have it, right? And so,
unless you're the rich dad, poor dad. I think he likes debt.
Exactly. Well, debt can be used very properly, and that's one of the things that we want to also do. Is within the app, we also have some financial education courses that the user can take, and the idea is that eventually we'll take users' debt from being a burden to being a tool that they can leverage to live a more prosperous life. But doing that takes a lot, right? And so we've decided that we wanted to focus on the specific segment of debt because most personal finance apps have overlooked that segment. They're focusing on the folks that are high net worth individuals that have assets that they can generate revenue. They have a high FICO score, so they can be sold a new credit card. Whereas Ditch works with the people that anecdotally have been overlooked, which is the people that manage and repay debt and that are struggling with debt.
So is there a story behind the name?
Well, it's very simple, and it's kind of cheesy too. But what we do is we want to help our users ditch their debt, and so for that reason, we've chosen that name. And it's worked. It's stuck. Our users like it. It's catchy. It's short, and it's made sense thus far.
So, at what stage are you as a startup?
I would say that we're in the seed stage. We're still finding our groove and finding our what they call in the startup world product market fit. But we believe that we're well on our way to do so. We're serving thousands of users that are using our platform every day. And we've been growing dramatically over the past 4 months.
So what was it like when you just put it out to the world and we're like, oh, I hope somebody kind of bites on this thing?
It was extremely, it was extremely underwhelming. You know, you spend months and months building a product, and you have this expectation that as soon as you turn things on, people are just going to show up. In fact, we were scared initially of whether our system could handle the load that we were expecting, and then you turn the thing on, and then all of a sudden it's your aunt, your mom, your cousin, your girlfriend, and a few buddies of yours that have downloaded your app.
Okay,
and then it takes
we got the
weeks.
low-hanging fruit out of the way. Now what?
Now what? That's exactly the question. And the now what is that then you have to build, which I think is one of the biggest challenges with startups, is you have to build mechanisms to get the attention of a lot of people, whether that's through the product messaging and making sure that that's simple enough for someone to understand, whether that's advertising on social media, whether that's building partnership with companies that already have your target audience. And that's really one of the hardest parts about building a company, is finding enough people to care about what you're building and making sure that you continue innovating on the product to make sure that people still continue to care.
So who are the right kind of partners for you?
We partner with fintechs, consumer lenders, banks, community banks, credit unions, all the folks that are actively having customers that owe them money. And the use case is that we partner with these types of institutions to help them service those delinquent loans. So if you're a consumer lender, a bank, a credit union, and you have $100 million in outstanding debt, and a portion of that is past due or people are missing payments, the use case there would be that you would send them an email and say, hey, we are making this tool available for you. And then that user would get the tool for free. And then the payoffs that we generate, or those roundups, will automatically go towards servicing that lender's debt. And in that equation, everyone wins. We gain a customer, the bank gets their money back, and the customer gets a tool that helps them manage their debt in a more efficient way to make that process more seamless.
And are you white labeling it for them, or is it still under the Ditch name?
Well, for now, we're trying to preserve our brand because we believe that the engagement is going to be higher. So if your lender is reaching out to you and saying, hey, we have this tool that we want you to use, you're going to be like, man, I owe you money. I'm not going to pick up that phone call. I'm not going to open that email. But if it's coming from a third party and it's a tool that's built specifically to help you, agnostic of the lender, then we are confident that the engagement is going to be much higher coming from us than it would be if it was a white labeled solution that we're making available to the lender. But that's not out of the question for our future. I think that initially we've seen enough traction to want to bring our brand to life as opposed to just the technology.
Now, what was it like going through the innovation challenge?
It was great. The preparation was very formative. It was the first time that I've been in front of an audience of that size, which initially was nerve-wracking, but I was pleasantly surprised to feel that comfortable in front of that many people. And it just is another example of pushing the boundary further and further beyond of what we're capable of as entrepreneurs.
So what'd you learn? Any new kind of thoughts or anything that somebody brought up that you hadn't thought of yet, or any connections maybe that are going to help you get to a new level? For sure. Connections, definitely. I mean, we've had tons of people reach out to us. We had hundreds of people download the app right on the spot because we put up a QR code. But I guess like the undertone of this is to just be prepared, and it's not as intimidating as you'd expect. Even if you're in front of hundreds of people or thousands of people, if you know what you're building and you deeply, deeply care about what you're doing, the passion is going to come through, and that's going to be what resonates with your audience. And it's not only enjoyable, but very productive at the end of the day for an entrepreneur to build the habit of speaking to large amounts of people and feeling super comfortable doing it. So what do you need more of? How can we help? Well, we're always looking to build partnerships with, like I said, consumer lenders, credit unions, banks. We also have a partnership channel with large employers. So we partner with companies to allow to offer Ditch as a financial wellness benefit for their workforce. So in the same way that companies pay for health insurance for their employees' physical wellness or gym memberships, we also believe that there's a huge impact that debt and money make on an employee's productivity, their retention, their mood. And we believe that serving up these financial wellness tools for as a perk for the employee is super productive as well. So we also partner with large employers and PEOs. So if somebody wanted to learn more, have more substantive conversation with your team, get the app. Is there a website? Of course. Our website is ditch.io/contact. That's the best way to get a hold of us. Again, that's ditch, ditch.io/contact. Well, Luis, thank you so much for sharing your story. You're doing important work, and we appreciate you. Thank you so much. All right. This is Lee Cantor. We'll see you in a few at Fintech South 2024.